Today, we are strapping in for a big one.
A very big one. We're looking at an aggressively bullish, on one name analysts are calling an infrastructure behemoth, NBIS, the NBIS group.
Right. And the source material here, it's primarily a single, very high-energy financial analysis report.
And it has a headline that, it just demands attention. It's NBIS, the $200 AI monster you are ignoring.
So no subtlety there.
None at all. We have to acknowledge
Not.
right away, this isn't some cautious, balanced report. It is pure high-octane conviction. It's all about extreme growth, a massive technical reversal, and the critical importance of physical AI infrastructure.
So our mission today is to really unpack that, to get behind the hype.
Exactly. We need to understand the mechanics and the data points that are backing this claim that NBIS is the AI monster of 2026. Why are these targets suddenly spiking to $211? What's it all based on?
Well, if you want to decode the data behind this really aggressive claim, we have to start where the report starts.
And where is that?
With price. Specifically, the highly volatile price action from yesterday's trading session. The whole thesis is that this volatility, it isn't chaos, it's actually a strategic opportunity.
Okay, let's unpack this drama.
And drama is definitely the right word. The analysis calls this intraday action a violent and profitable reversal.
Which is a very strong phrase.
It is. And it suggests it was all a psychological test designed to do one thing, shake out the weak hands.
Okay, so let's walk through it. What happened?
Let's run the timeline. It starts with the drop. So NBIS opens around $95, but the momentum immediately goes south.
Okay.
Selling pressure just intensifies, and it pushes the stock sharply down to a low of $90.94.
Wow.
And the report actually calls this moment the trap. It's where the bears, the short sellers, thought they'd won the day. Right, because that psychological component is so critical.
Yeah.
When we talk about shaking out weak hands, we mean triggering stop losses.
Exactly.
You're capitalizing on fear from short-term traders who maybe don't get the fundamental story. The stock dropped almost $5 fast. For a lot of algorithms, for a lot of people, that confirms a bearish trend.
But then
Then
came the rip.
Exactly. And this is the key. The report says as soon as the price got near $91, massive institutional level volume just flooded the order book.
So not retail traders.
No. This was the smart money, as they call it. The big funds stepping in with deep pockets, just absorbing every single share for sale.
And that buying pressure just pushed it right back up.
All the way up past the opening price, and it closed the day at a really commanding $100.24.
So it closed near the high of the day, a total reversal.
A total reversal. And when you analyze those results, the immediate implication for anyone looking at a chart is just profound.
That's a nearly 8% gain on the day.
It wiped out days of selling. But more importantly, and this is the technical term, that movement created a massive bullish engulfing candle.
Okay, so for you listening, what does that actually mean?
A bullish engulfing candle is one of the most powerful reversal signals in technical analysis. It means the price action of that one day completely swallowed or engulfed the price action of the day before.
From high to low.
From high to low.
Yeah.
And it closed significantly higher. It doesn't just signal that buyers were dominant. It signals an overwhelming structural shift in sentiment. The institutions were basically screaming, this price is too low.
So the actionable conclusion for the analysis is what exactly?
It's crystal clear. The institutions are buying the dip. Aggressively. They saw that brief panic below 95 as a gift, and the report literally says they are loading the boat before the next leg up.
So this reversal signaled the end of the consolidation phase.
And the start of a fresh upward trend, all driven by massive capital.
But, aggressive price action, a big candlestick pattern, that's only half the story. If institutions are really loading the boat for a potential 100% gain, they need a very powerful fundamental reason.
Of course.
That brings us to the business case. I hear AI monster, I hear rocket fuel, but that sounds like every growth stock pitch for the last 3 years. Where does this analysis actually differentiate NBIS from all the other AI hype?
And that is the essential question. The difference is that NBIS isn't selling, abstract software or some consumer model.
Right.
They are positioning themselves as the core backbone of the AI internet. It's a very deliberate, very capital-intensive approach focused purely on infrastructure.
The old selling the shovels analogy during a gold rush.
It's the classic analogy, and it's perfect here. While everyone else is rushing for the gold, the software, the models NBIS is selling the shovels. They provide the physical reality, the giant data centers, the high-performance computing clusters that make the whole AI ecosystem even possible.
And there's a huge barrier to entry for that kind of business.
A colossal barrier. It's not enough to just go buy some chips. You need specialized cooling, custom power grids, their own proprietary networks, and the expertise to run these huge clusters 24/7. That is their entire business.
And the analysis report points to specific business drivers, right? Starting with the tech itself. NBIS is deploying the new NVIDIA Vera Rubin systems.
And critically, according to the analysis, they're deploying them faster than almost anyone else in Europe. That speed is a massive competitive advantage.
Why is speed so important here?
Because computational power is the single biggest bottleneck in AI right now. The company that can deliver the newest, fastest chips and get them running first, well, they win the high-margin contracts.
And who are these high-margin contracts with? The analysis mentions a massive $17 billion pipeline.
A $17 billion pipeline. It's an incredible number. And they're not chasing small clients. They're specifically building the huge clusters needed by giants. We're talking about Microsoft and Meta.
So let's pause on that number, 17 billion.
We have to. I mean, that's basically the entire GDP of a small country, just for shovels. These are the clusters needed to run the next-gen AI models for the biggest companies in the world.
But hold on. If two clients, Microsoft and Meta, make up most of that 17 billion, doesn't that create a huge concentration risk? What if one of them decides to build it all internally next year?
That's a crucial point. It's a very nuanced point, and the analysis kind of implicitly addresses it by focusing on the specialization.
Okay.
This concentration isn't seen as a risk so much as it is a validation and a barrier to entry. Building this kind of hyperscale cluster, especially with next-gen systems like Vera Rubin, is so complex it requires custom data center designs.
So it locks them in.
It effectively locks those clients into long-term partnerships with NBIS. Because for them to move that capacity or build it themselves from scratch would take years and billions of dollars. The reliance on NBIS for speed and specialization is what validates their claim as the true backbone provider.
So when you put it all together, fastest deployment of the newest NVIDIA tech, multi-billion-dollar contracts with the biggest names in the game. You start to see why the institutions were willing to step in so hard at $91.
Exactly. This isn't some abstract hope for the future. It's current, massive, highly capitalized infrastructure delivery.
Okay, so this is where it gets really interesting for me. This brings us to the valuation disconnect. We have to connect the fundamentals, the operational success, to those incredibly aggressive price targets we mentioned at the top.
Right. Let's look at the financial data in the report to see the gap they think they're exploiting. Right now, NBIS has a market cap of about $25 billion.
$25 billion, okay.
But based on their existing contracts and that $17 billion pipeline, they are projected to hit $7 billion in revenue this year.
$7 billion this year.
Yes. And the valuation rationale in the analysis says there's a profound valuation disconnect. Their argument is actually pretty simple. If NBIS hits that $7 billion revenue target, it is easily a $50 billion company.
So double its current value. What multiple are they using to get from $7 billion in revenue to $50 billion in market cap?
They're basically implying a forward price-to-sales multiple of around 7 or 8. And the key comparison here is with a peer like CoreWeave, which is in a very similar specialized cloud niche.
And how does that compare?
Well, those peers are trading at much higher multiples, often in the mid-teens, because the market gets the high growth and strategic value of this kind of infrastructure. The analysis basically says NBIS is trading at a fraction of their value, which makes it severely undervalued if they execute.
And a $50 billion valuation.
A $50 billion valuation, as the report draws a direct line, puts our stock price right at that $200 mark.
Yeah.
Now, we have to be balanced here. Hitting $7 billion requires flawless execution.
Of course.
But the sheer size of the pipeline suggests the demand is absolutely there. The only question is how fast they can build.
And the analyst consensus seems to support this. The report cited a strong BY consensus, 6 buy ratings, and 0 sells.
0 sells. That speaks volumes. It says the primary risk here is execution, not a flawed business model.
And the headline target, the street high, is $211 from Northland Capital,
who also named NBIS a top pick for 2026. That is a massive vote of confidence. It's over 100% potential upside from where it's trading now.
Which brings us to the proposed trade plan. How does this analysis translate into something practical for you, the person tracking this opportunity? The report keeps saying that the volatility we talked about earlier, it should be seen as a gift.
Right, as an opportunity.
So let's summarize the key technical levels they suggest. They establish a clear support, or what they call the golden zone, right around the $95 level.
Which is where the reversal started.
Exactly. The report recommends watching that price. If the stock retests 95, it's presented as the ideal point to accumulate shares, because that's the proven area where institutional buying comes in.
Okay, so that's the support. What about the upside confirmation?
The crucial breakout level is clearing yesterday's high. That was $100.68.
And that's the milestone.
Yes. The report defines that as the milestone needed to confirm, the reversal is complete. It basically says the short-term volatility is over and the new upward leg has begun.
And once that 168-cent level is cleared, especially on high volume,
The whole technical picture changes. The analysis says there is very little resistance until the stock starts getting near its all-time highs, and those are around $141.
so that's the first target.
That's the first target, a potential 40% gain just from the breakout level to 141. That's seen as the immediate opportunity once confirmation happens.
So the overall verdict from the analysis couldn't really be simpler.
Let's hear it.
It's that the trend is up and the fundamentals are stronger than ever. They're positioning this whole technical reversal as the final confirmation that the institutional support needed for that multi-bagger move is here, and it's ready to drive the stock toward its fundamental value.
Okay, so let's synthesize this whole deep dive.
The bottom line is that the extremely aggressive, bullish case for NBIS isn't built on, abstract software hype. It's built on the physical, tangible reality of AI's growth.
The non-negotiable need for it.
The overwhelming non-negotiable need for these advanced clusters and specialized infrastructure. They are the picks and shovels feeding the largest tech companies in the world, and they have the contracts to prove it.
And for you, the key takeaway is exactly what the analysts concluded. The core message is to not let these wild intraday swings scare you out of what they believe is a generational winner.
Because NBIS is physically building the foundation for AI's future.
And its stock price, according to them, is just starting to catch up to that fundamental reality.
But this does raise an important question. For long-term holders and maybe for new investors,
Go on.
given the heavy institutional buying we saw and that massive $17 billion pipeline that's linked to titans like Microsoft and Meta, how much of this optimistic $200 target is already being priced into the market's long-term expectation, even if the short-term volatility continues?
Are the institutions buying today already positioning for a $200 future?
Exactly. Something for you to mull or explore on your own as you continue to track this AI monster.